Hi everyone, it's Tiana, aka the Paid Pretty Investor, aka the Sniper Queen, and today we're going to talk about how to get those really good tight entries, those sniper entries. But before we get into all that, I just want to say I am not a financial advisor. I am not a financial manager. The things that I share with you are just based on my own experiences, my analysis, and my observations. So if you should decide to try any of the things that I share with you, please do so in a demo account. Also, please like, share, and subscribe to this video and for future videos. So without further ado, let's get started. So when you're looking to get a tight sniper entry, you want to look to your 15-minute and below for your entries. I'm not going to go down the whole market analysis. I have that in or top-down analysis. I have that in the last video I just did. But I will say that the market is fractal. As long as you understand your structure, what you're looking for, structure, you can get a sniper entry. So with the sniper entries, I like to enter off consolidation. I'm just going to point to this area right here. Consolidation, I know a lot of people tell people to stay out of consolidation. However, consolidation is your friend if you're trying to get a wick entry or a sniper entry. You can utilize this whole area, or you could just utilize this part here. I would suggest, if you do not have the paid version of TradingView, that you don't go past the 3-minute. And the reason why is because you want to be able to look up a time frame and look below a time frame before you enter. And what you're looking for is you want to make sure you're still in sync with the structure of the market. So with that being said, let's look at this whole area right here. So this area is consolidating. It's going back and forth. So that's the first thing. That's my first requirement for my entries. My second requirement is I like to see imbalance. There are different types of imbalance that I look for, and I'm just going to share with you really quick. So the first type of imbalance is like a gap in the market. I'll go to the seconds because that's the easiest place to see them. You see gaps all over in the market. That's imbalance. So coming back to the 15-minute, I'm looking for gaps in the market. Second type of imbalance I want to see is kind of like the wicks are not touching. So let me look. From here to here, there's clearly the wicks are not touching. You see there's a small gap. That's imbalance. That's the second type. And these are in no particular order. The third type of imbalance is 3 or more candles of the same color going in the same direction. That looks the same on the higher time frame as the imbalance that I just showed you. However, on the lower time frame is different. We got to remember the market is fractal. The last type of imbalance is 4 or more candles going in the same direction. So for instance, trying to find right here, we have 4 or more candles. This is more like a high volatility imbalance. And so this is the other type of imbalance I like to share. So let me go back to the one I had. I'm just giving you an example right here. So now that we understand that the four types of imbalance, we have consolidation. That's the first thing that we need. We are looking for imbalance. Now in this, there is imbalance right here. So if we look, just looking at this one right here, we have imbalance that's going on right here. We have the three type of imbalance where you have 3 candles. I know this is a longer candle. We have this type of imbalance, but we also have imbalance from here to here because they're not touching. So we have 2 types of imbalance actually in this area. The third thing that I look for is the candle that pretty much started the imbalance. And if I look right here, this candle started the imbalance. So if I just highlight this whole area, bring this over now, and let me just, let's change the color to red and just extend it over. You'll see how you can get a nice wick entry right there. And before it drops off, and look, it continues to drop off. Now, we're going to take this down a little lower. I did this on the 15-minute. Me personally, I enter on the 5-minute, 1 minute, sometimes the 15 seconds, but I like to stay on the lower the better for me in terms of like the 1 minute, again, the 1 minute to 5 minute. So this is the, let's say, September the 3rd, around September the 3rd. Let's look on the 5-minute. I'm going to take you down. And look, there's entries in this too. I'm just saying. Matter of fact, let's look at the entries that's within this. Okay, so you're going to see consolidation all over the place. Like you'll see it often, more often than not, here, there, everywhere. So the type of consolidation you see, it doesn't really matter. You just have to get comfortable with what you see. So, and also I just want to mention the consolidation, sometimes it looks different on different time frames. Because I've been looking at consolidation so long, I kind of know what I'm looking for. But I just wanted to bring that into your attention. Let's do this one because it's closer to the end. We have consolidation right here, this area right here. Let's go highlight it for you. Actually, you could probably bring this over, but I'm just going to do this one right here. We have consolidation right here. Do we have imbalance? Yes, we do. We have imbalance right here. And then this is the candle that was responsible for the imbalance. If I take this off and just highlight that candle and bring it over, look at that. Beautiful wick entry again, right? This is based off the 5-minute. Let me try to go to the 1-minute just to show you how it looks on the 1-minute. Now, keep in mind when you're on the 1-minute, a lot of the times the market comes to that area multiple times over and over and over again. So, and when I say over and over and over again, I mean 3 times. But I just want you all to keep that in mind when you're looking. So even with the 1-minute, we're pretty much at the top here, because if we start right here, we're here. But let me just still show you again. This area right here is imbalance. It's imbalance on the lower time frame. Actually, this whole area is, but you could just use this area right here. So if I'm looking at this area for imbalance, right? Let me highlight the area. I'm not imbalance, I'm sorry, consolidation. I'm sorry, wrong words. If I'm looking at this area for consolidation, right? And then I see this imbalance right here. Which candle is actually responsible for that imbalance that I have? This candle is responsible for the imbalance. And I'm going to change the color. Let's change the color to a darker color. That is responsible for the imbalance. If I bring this over, look at that. Wick entries. These actually right here are T entries. You're still inside of this other time frame entry, but for those who don't know, I just want to explain what a T entry is. A T entry, I love those entries when I get those. And this is basically how you get a T entry. A T entry basically has no drawdown. You're straight profit. You don't really see any red. So that's pretty much how you get your sniper entries. I'm going to take you up to the higher time frame just so you'll see what they look like on the higher time frame. Let's go to the 1 hour just to look at it. And look at that on the 1 hour. Look at those entries. You're entering all the way up here. Beautiful entries before you have these nice drops. So if you have any questions, please feel free to comment below and I'll try to answer your questions as best you can. But for now, you all stay safe. You all have a blessed day and stay good in these trading streets. Take care.